Let's give you the markets update now, and local trade set for mixed trade today after a muted session on the JSE, and the Rand still chasing gains. The JSE closed slightly weaker on Monday, with its global peers mixed as inflation, global growth and recession concerns are taking center stage as the first half of the year draws to a close. Simon Brown is JustOneLap founder, joining us now for a quick markets update. Simon, good morning to you, and thank you for your time. Let's begin with that quick overview of how the markets are faring today after closing in a sluggish previous session.
Yeah, Ollie, we've actually had 6 red days in a row up to yesterday. The good news is even after Asia and the US were red overnight, we've actually opened green. Overall market up 0.8%, been led by industrials, up 2.25%. That's Naspers and process more than anything. We've got banks up about 0.2%. Resources a bit in the back foot. They're down 0.5%. That is, commodities are slightly green this morning, but I think the Rand is taking some of that shine off. We've got a stronger currency this morning. 18.52 against the US dollar. For 18.51 as I say that. 22.58 against the pound, and 20.24 against euro. So around about 0.5% stronger across the major currencies.
Let's talk about Nedbank further lowering its 2023 GDP growth forecast, flagging quote-unquote a muted first half earnings growth. What does this tell us about the state of South Africa's economy?
It tells us that it is tough out there. I mean, from a consumer perspective, we've got high inflation, high interest rates, high fuel costs. I mean, they're off the highs of last year, but still relatively high. And so the consumer's just not out there spending. The Rand a little bit stronger, but even at that 18.50 for businesses, it makes imports more expensive. Commodity prices have come down a fair bunch in the last 2 years when they peaked in mid-21, so we're earning less there. It's an economy that's struggling, and I haven't even mentioned the load shedding. At the moment, we're largely being absolved of it, but all of those are putting pressure on an economy that hasn't really done very much, and truthfully, about the last decade, pandemic aside. And importantly, 0.1 kind of ties in with World Bank, IMF, but population growing at 1.5%, it means that we're just getting poorer, and we just can't sort of get ahead and start really creating proper growth in our economy.
Yeah, let's stay with company news. Naspers/Prosus publishing its annual results for the year, which ended on the 31st of March 2023. And pay attention to this, Simon. This company's intention to remove the cross-holding structure. Talk us through their numbers.
Yeah, okay. So this really hurt my head this morning, because this is not simple English as you or I or the viewers would be talking. So if we go back to 2019, Naspers held the stake in Tencent. That's the Chinese tech stock. There was a discount, so they decided to resolve that problem. They would form Prosus, listed in Amsterdam, and Naspers would hold a lot of Prosus. Prosus would hold Tencent and a lot of Naspers. And if that sounds complicated, it's because it is complicated. It really is complex. The idea was to unlock value for shareholders. It hasn't worked. 4 years later, it absolutely hasn't unlocked value. So now they're going to unwind that whole process via what is another fairly complex structure. At the end of the day, Prosus will hold Tencent, and Naspers will hold Prosus. So you won't get that loop back. So it does simplify the process. But it does make me wonder, why did they do that dance 4 years ago? A lot of bankers and advisors, I think, have done very well out of it. Shareholders, not so much.
Yeah. Let's cross to our neighbor, Simon. Zimbabwe's inflation back at 3 digits after currency crashes there. Help us make sense of the developments in that country as it edges ever so close toward an election.
Yeah, that election is going to be important, probably. So inflation, 175.8% for June. It was 86.5% in May. That is runaway hyperinflation by any definition. What's happened is Zimbabwe imports a lot of what they use. I mean, as do we to a degree, but a lot more than even most of their SADC neighbors. And with that, the Zim dollar literally crashing 50% over the period, it just means that all those goods that are coming into the country are that much more expensive. And it has the ripple effect, because, maybe your input comes in more expensive. So whatever you're manufacturing and selling, whether it be a food product or whatever it might be, that is then seeing prices get pushed up. People want higher salary increases, and that spiral does absolutely start. But it's a bleak place, 175%, and that's prices doubling about every 5 months. I mean, we worried about our inflation when we got into the high 7%. I can't comprehend what 175% feels like.
Sure. It's going to be tough. I'll tell you that much. Simon, let me thank you very much for that markets update. Simon Brown is founder of JustOneLap.